welcome to Best Stocks 2019 with me, Avan Divash and Mubina Kapasi. And what a year 2018 has been. A lot of investors have burnt their fingers in the stock markets because it's been filled with euphoria as well as nervousness and disappointment. But we're here to, sort of read the crystal, do a little bit of crystal gazing, talk about some of the best stocks in 2019. And for that, we have on board our guests joining in. On the technicals, Dr. C.K. Narayan as well as Kunal Bothra, and to guide us through the fundamentals with top wealth creation ideas, Hemang Jani and Gaurang Shah. Gentlemen, great to have you on board. Gaurang, I'm going to start off with you. While we have seen quite a few events that have marked our calendars in 2018 and a lot of nervousness in the equity markets, no doubt the one big event that is going to be the focal point of the next year is going to be the upcoming elections. Do you think that the markets are likely to take it in their stride, or that we're going to continue to see it spiked by quite a bit of volatility up until the big event?
Well, thank you for having me on the show, first of all, Avan. And first, wish you, your entire team at ET Now and all the viewers a very healthy, happy, pleasant and a prosperous 2019. And I hope that whatever pain we've seen in 2018 does not slip over or reflect on 2019. And I think by the time we are done and dusted with the first half of 2019, we'll have a lot of clarity in terms of elections, outcome, who forms the government, etc., etc. So we expect a lot of stability to come in the second half of 2019, and with that view, I think whatever correction we have seen now and possibly what we'll see in the first half of 2019 on fallback of the big domestic event, I think that these are going to be great times to possibly level into some of the stock ideas with earning visibility, great corporate governance, and of course, keeping a 1.5 to 2 year time horizon. I don't think markets are going to disappoint you. So possibly you are going to see some choppiness, but these choppiness, difficult times are actually the times wherein you can actually go and buy those stocks which you've been waiting to buy at reasonable valuation with a longish time horizon. So I hope there are better times ahead in 2019 and beyond.
Okay, let's also talk about the technicals then of the market, and the highlights of course for the year have been very interesting ones, especially given the fact that the 200 DMA level, which is a very crucial one that every technical analyst on the street watches out for, had been breached by the Nifty, and just about that level we've been having some difficulty. Dr. Ryan, what are the highlights that you saw in the way the Nifty moved in the year gone by?
Through the year, the market has been into a low top, low bottom kind of formation, and in the process, the 200 DMA that you mentioned has been broken, and in more recent times, there has been a very spirited rally which has regained the territory about 200 DMA. Now, this is the long-term moving average which kind of decides the market sentiment over the longer period of time. So, the very fact that the index has been able to regain this and is able to sustain, howsoever tenuously at the moment, but still it's doing so, that is to be termed as a, as a piece of good news, especially in the light of the overarching kind of bearish news and sentiment and volatility that we are currently witnessing. So I would say that we should look forward to 2019 with some amount of expectation. No doubt there is an event planned right in the middle of the year, but it does seem that the market is weathering the volatility and trying to take it in its stride. So we do look forward to 2019 as being certainly a much better year than 2018.
Okay, so on that note then, let's get cracking and talk about some of the best stocks for the year ahead. Hemang, I'm going to begin with you. From the large cap universe, which are the two stocks that you think merit a buy from investors and are top wealth creation picks?
Axis Bank and Divi's Laboratories. Axis Bank we like because I think most of these corporate lenders, asset quality related issues are behind them. The recognition and the impairment and to a large extent the provisioning is behind them. The new management is there to really take the growth forward. And the most important thing that we like about these corporate banks is that vis-a-vis PSUs and NBFCs, they are in a much better position to take advantage of the growth opportunity. Because of the way the things are in the PSU banks, the growth may not be that great, and NBFCs also are struggling with their own issues. So they are extremely well placed. So we think that Axis Bank can give a very decent risk to return kind of a opportunity for investors, and we are looking at a price target of about 720. The other stock that we like is Divi's Lab. it had its own issues relating to US FTA last year. Those issues have been sorted out. The two new units, Unit 1 and 2, both are operational. They've invested close to about 1500 crore. And the good part next year would be that the entire, issues relating to regulatory hurdles are behind them. So the cost attached to that will not be there. And it's a very high margin business of 35 to 40%. So because of issues in China, the new opportunities are there for DVs, and we think that it will do extremely well. And we are looking at a price target of about 1740 for that. So these are the two stocks that we like in the large caps.
All right, Axis Bank as well as Divi's Labs. Yes, with the entire opportunity in the Chinese pharmaceutical space, Divi's Labs certainly is something that Hemang is flagging off. But Hemang, you're not alone in flagging off Axis Bank. Kunal as well does have this one as his technical pick. And along with that, even Z Entertainment. Kunal, what's your rationale?
So for Axis Bank, Mubina, I think the stock is heading towards a breakout on the multi-month charts. There were multiple attempts towards breaking the 630, 650 barrier. The stock has tried to, take resistance in this area. But when you see a multiple, resistance or multiple attempts towards a key resistance, generally those resistances or those levels get taken off. And I think that's what I'm betting on could happen for Axis Bank. So I think start of 2019, this could be, yet another private sector bank stock, which should be, finding some traders, favorite. And I think at current levels, as well, it's interesting buy. 750 is the target which I am flagging on for Axis Bank. Stop loss to be kept at 550 levels. And Z Entertainment also, I think end of 2018, at one point of time the stock was almost 20-25% off its 200-day moving average. It tried to catch up, and now it's that gap has narrowed significantly. I believe that this stock should be in process of restarting a new uptrend. Volume patterns have improved significantly for Z Entertainment as well. So that's also a buy. Targets have placed close to 580 and stop loss at 445.
Okay, that's the take from Kunal. His top bets in the large cap space: Axis Bank, target price at 750, and interesting buy at the current levels as well, and some interest being seen in Z Entertainment. Gaurang, let's take it across to you from the large cap universe. Which are the stocks that you would hand pick for viewers?
Avan, we picked metal and private sector banking. In metal, Tata Steel is a stock that we've been maintaining a positive stance for a very long time, and of course with the new capacity in place and the takeover of Bhushan Steel with close to about existing capacity of 8,000 metric tons, which is scalable upwards to 16,000 metric tons. I think this is a stock is a great investment idea, and not to forget with the kind of whole host of infrastructure setup that the government is planning to do. There are two basic things that will go into making a very durable and a strong infrastructure. One is cement and other one is metal. And over here, Tata Steel is the stock that we believe from the current levels, your downside is extremely protected. And not to forget, the overseas operation hangover is now done and dusted. And the domestic consumption is likely to throw in tractions on the earnings front. Point number one. Point number two, we've seen some amount of traction on the higher side for the flat and long products. So we believe that 710 could be the target on Tata Steel with a long-term point of view. On the private sector banks, well, you all have already discussed about Axis Bank, but one bank that we possibly are extremely positive about, which has gone through a lot of turmoil and difficult time, is ICICI Bank. Again, risk reward extremely favorable, and I believe the low that it made when the going was bad was close to about 260 or 240, correct me if I'm wrong. From those levels, the stock has gone up to 350, and we believe with the earnings improvement, change of guard at the bank, and the opportunities that will open up with the NCLT and IBC included, 430 could be the target on ICICI Bank. Now, these are all 18 to 24 months kind of a time horizon target on both these stocks, Tata Steel as well as ICICI Bank.
Okay, those are some large cap names coming in from Gaurang Shah. And Dr. Nayan, over to you. L&T and ITC, these are the two stocks you've picked out on the technicals. Why is that?
Both these stocks have not really flourished like the other stocks have in 2018, the large cap names I'm saying. And but at the same time, what we are finding on the charts is, for example, for L&T, there is this long 1 year old consolidation, and this consolidation is happening at the top of the advance. Now, we had the stock trading at about 1400 levels early part of 2018, and we are still trading there despite the fact that the results flow across the year has been pretty exciting, and progressively I think institutional ownership buying is going on through this through the past set of quarters. I think all this is going to combine together, and the very fact that the stock is about to challenge its former highs and the order flows are pretty consistent and the outlook for the large cap remains to be positive, I would think L&T could raise to about 1750 across 2019. So that's about a 20-25% upside from here. Similarly placed is ITC, which has not really performed in 2018, but at the same time, if you look at the long-term charts, you will find that very definite accumulation patterns are getting created, and these are being formed on top of prior accumulation patterns. And I do believe that the 250 levels which that stock has been maintaining since 2014-15 is quite unlikely to break for a very long time to come. So with that as a very definite bottom and not too far away from here, the stop loss is very clearly defined. On the upside, I think there is room very definitely till about 360, which again translates to about 25-28% upside from where it is trading right now.
There you have it. Those are some interesting large cap bets coming your way. On that note, let's take a quick break right here on the show. But on the other side, we get you some of the top stock ideas from the mid cap universe. This is Best Stocks 2019.
Welcome back. We're in the midst of identifying all the stocks of 2019 that you need to watch out for. Avan and I are joined by our experts right here in the studio. We have Kunal Bothra, Dr. Narayan, as well as Himang Jani in the studio, and Gaurang Shah as well joining in. Kunal, I'm going to throw this question across to you. Nifty Bank, this year so far, it has been able to post a marginal outperformance versus the benchmarks, and banks certainly, even for a whole host of experts we've chatted with, have been one of the favorite picks. So what is it that you'd recommend on a strategy when it comes to Nifty Bank?
Definitely believe that even Bank Nifty should continue to outperform, and I think in the last 3 years or 4 years we've seen a steady rise happening for Bank Nifty. Now, more important than the rise of the Bank Nifty is the ingredients of Bank Nifty. So 2018 and 2017 was a tough year for PSU banks, but in the end of 2018 you saw a lot of the private sector banks emerging as strong price recovery candidates, and then that sort of balanced off the Bank Nifty. Now you've seen the major part of the correction happening for private sector, the PSU banks, and now the private sector banks also look very attractive on the charts. We discussed Axis Bank, even ICICI Bank and Kotak Bank, they look very attractive on long-term charts. So going by that, then the ingredients of Bank Nifty, I believe that this index should be a key index for the Nifty. Because the ingredients are now settled up quite well, and if the private sector banks manage to outperform of what they have shown in the last of half of 2018, then I think it would be a extremely positive year for Bank Nifty overall as well.
Okay, so it's expected to be a strong year for the Nifty Bank going forward. Now, Himang, while we're characterizing the next year as a big event being the election, the year 2018 as well has seen quite a few large events. We've seen the markets as well scale levels of 11,760 on the upside. But what is your, what have been some of the key highlights of the year 2018 if we had to turn the clock back?
I think, Avan, clearly 2018 was the most difficult year for the overall market, and more importantly, if you see the divergence in the performance, both with respect to the Nifty and its constituents and the mid cap, it's been huge. And I think, a large part of whatever 3 to 4% gains that we have seen in Nifty has come on the back of performances by some of the private sector banks and, maybe some of the auto names, Reliance, etc. So the entire performance has been driven by very few companies, and there has not been too much of clarity about the earnings growth that one is really talking about. So that is the most, I think, difficult part about the market for 2018.
Okay, let's talk about the theme of broader markets and mid and small cap names then, and I'm going to start off first with you, Gaurang, then. Tell us, after all the carnage we witnessed in small and mid cap names, where are you finding value? What are your top two picks from the mid and small cap names?
So, yes, you're right. I mean, I think there's been too much of pain for the entire part of 2018 as far as mid cap and small cap are concerned. But at the same time, we also believe that, not all sectorial mid caps are bad. There are opportunities to possibly look at this correction as an investment opportunity. And with that view, first one is from the auto ancillary OEM segment. Apollo Tyres is the stock that I'm talking about. Well, couple of things put together. First is lower benign rubber prices. Along with that, we have lower and benign crude oil prices. You have a very strong domestic market with the kind of new launches that are lined up across the automobile sector, whether it is a commercial vehicle, whether it is a passenger car, SUV, UVs, two-wheelers, three-wheelers. You have a whole host of, and all these definitely need tires as an important component that goes into making a perfect vehicle. So we are positive on the new order market with these new launches. Secondly is the replacement market. Equally robust is the replacement market, and not only does Apollo Tyre have its presence pan India, but has got some decent presence in the overseas market as well. So this is an opportunity. 310 is the target on Apollo Tyres, and our sense is that with this lower benign input cost, margins should start looking much more healthier and better and stronger, and that should translate into earning visibility. The second one is from the paint sector. Asian Paints, if you will, is the stock that we are again extremely positive. Here also, a terrible positive, great, I beg your pardon, positive impact with lower crude oil prices. And of course, Asian Paint is also one of the company which has got, last 2 quarters, if you actually go to see, there were good contribution coming in from automotive and decorative paint segment, present in India and across different continents as well. Great products offering, and of course the consumer loyalty or a product recall from a consumer side is concerned is very, very high for companies like Asian Paints. Here, of course, the stock has outperformed compared to the peers and some of the other sectors, but we believe that the going is still strong and the earning visibility look very, very clear. 1485 is the target on Asian Paints from a long-term point of view.
Okay, there you have it. Those are some interesting bets coming your way from Gaurang. But, Dr. Narayan, you're always known to pick out some very interesting names, if you will, from the mid and the small cap universe. So going into year 2019, which are the stocks that you're spotting? What are the target prices that you have from the mid cap universe?
Well, first of the stocks that I would want to own in for 2019 would be fine organic chemicals. Now, this is the more recently listed stocks in the chemical space. They make oleochemical derivatives, which are all specialty additives to a wide variety of industries, end users. I think what strikes me the most in the chart of fine organics, that if you were to take all the stocks which got listed in the last 1 year or more, you say, fine organics has been among the very few which has really weathered the decline of 2018. It has held strong at the high levels and is actually about to challenge its all-time highs. It's trading currently up at about 1140, 1150 thereabouts. But I think the kind of strength that it has displayed in the face of a pretty adverse year, particularly for mid caps, I think that would indicate that the stock has a lot of takers in the market. Performance wise, product wise, let's say market share and what they're doing, any which way you try to dice that stock, you will find it coming up trumps. So I think fine organic is just waiting for better times in the market, which I believe 2019 would provide. Currently at about 1100, 1150 price zone. I would expect it to roll on till about 1350, 1400 quite easily in the coming year. Second stock that I'm picking is Rbl Bank. I think that's another stock which has made a very, very strong bottom around 450, 460 levels, and then has come up pretty, smartly from those levels, currently reaching about 580. I think the stock is building up for yet another move on to the top side. If you look at it from a, let's say, price to book valuation, you'll find that it's not among the more expensive banks, and ownership is not as high as the other private sector banks. So if there were to be a realignment across the banking space, I do believe that RBL could be one of the go-to banks, and that is getting reflected on the charts. My sense is that it would pop up and create a new all-time high between 700, 750 in the coming year. So therefore, it merits a buy at the current level and on any dip that we may see across the next year.
Okay, two very interesting picks as always from Dr. Narayan coming in. But continuing with the story of finding value in mid and small cap names at these valuations, Hemang, what is it that you're flagging off?
There are two stocks that I have shortlisted, Mubina. One is TCI Express. It's a very significant player in the logistics space with a 5% kind of a market share. Remember, the space is dominated by the unorganized segment, and there are certain triggers that we are looking at for TCI Express. One is that because of the GST and the e-way bill being passed, there is going to be a very strong momentum, particularly in the manufacturing segment. We have seen a very significant improvement in the road infrastructure. So these are the positive triggers for TCI Express, and because of the asset light model that the company is following, we are expecting a growth of about 22% in the earnings for the company for the next 2 years. Overall target that we have set is about 20% higher from the level it is right now. The other company in the mid cap space that we have identified is Atul Limited. It's an integrated chemical company with a presence across many products. Last 3 years, company was not growing in a significant way, but last quarterly numbers, the growth has been extremely good. And the visibility wise, company has put out extremely aggressive revenue growth target of 15.5%. So given that the company has invested in new manufacturing unit and the fact that the chemical industry is reviving in a big way, particularly in the export market, we think Atul is in an extremely well position to grow over the next 2 to 3 years. And again, here we are looking at a 20% kind of an upside.
All right, there you have it. Some top recommendations there from Hemang, what he likes from the mid-cap universe, betting on Atul Limited as well as TCI Express. Kunal, let's talk about your recommendations as well. SRF and Praj Industries both have been stocks that, despite the kind of acute volatility we've witnessed in 2018, have managed to hold their ground to a great extent. Do you think that this is likely to be replicated in the next year?
The reason for picking up both of these stocks, and especially on SRF, is that complete change of behavior of the stock. So earlier the stock used to be an extremely high beta stock. It used to participate in volatile trends of the markets as well. But in the second half of 2018, when the markets become extremely volatile, this stock actually found a stable uptrend. And now also I think it's trading about those 2000 levels. Look at the longer term charts as well, the 5-year, 10-year charts as well for SRF, and they are extremely positive. So I see no reason why the stock could reverse its trend. I believe that this trend should continue for the stock on the longer term basis as well. So that's the buy with 2450 as a target on SRF and stop loss at 2050. Praj Industries, I believe, is an interesting chart because it's at a breakout point of almost a 10 years of sideways range. 110, 120 odd has been a tough range or a resistance point for Praj Industries, but I believe that the volume patterns are showing indications that the stock should break out of this multi-year resistance. So that's a buy, targets of 150 and stop loss at 80.
All right, there you have it. That's the technical call for 2019 coming in from Kunal Bothra. On that note, gentlemen, Kunal, Dr. Narayan, Gaurang, as well as Hemang, thanks so much for joining in on ET Now and, of course, giving us your top picks. There you have it, 16 stocks flagged off on the technicals as well as on the fundamentals for 2019. With that, we'll wrap it up on this edition of the show. Thank you and, of course, have a very happy new year.